Good morning, guys. It's super early. This is September 2nd and 6:51 a.m. That's London time. So this is on 15 minutes on GBP/USD, of course, that I'm trading. The reason why I'm doing this video is to show you guys before and after my entry. So first, how did I get all of this line here? I got all of this line by just pulling out a trend line. So there are two very core principles in drawing a trend line. Number one, the trend line has to have at least two peaks or two troughs. All right, when I mean two peaks, I mean something like this, something like, yeah, here is a peak, at least two, here's a peak. So that's a valid trend line. So you just bring out the trend line to make sure it touches this peak, and you elongate it out. So maybe next time in the future, whenever price touches there, there's definitely going to be a reaction. It's either it bounces down, or if it breaks retest, it's going to move up, which is what is currently happening right at this region. All right. So that's that on that. But when it's from the bottom, you have to have at least two troughs too. Two troughs. We have 1, 2, and 3. So broke out. Now we are dropping to the downside. So that's, and it has to be relevant to the chart. Relevancy test is a whole lot different one, and I teach people on how to know relevancy test. So number one criteria to draw a value trend, and number one, it has to have at least two peaks or two troughs. And number two, you have to pass the relevancy test. Relevancy test means it has to be relevant to the current chart. All right, so that's it. So now here's what I'm currently looking at. So that's how I have all these trend lines, valid trend lines all across my chart. So this is a valid one, this is a valid one, and this is also a valid one. So yesterday, you all agreed with me before this move happened. I dropped this analysis on the chart on the group. Here's it on the group, and I had something like this Telegram. Please, if you want to join the Telegram channel, the link is in the description box. Check it out straight there. So here was my analysis. So this was the trend line right here. So I said we are waiting at this box to long or buy. Watch out for price action in this box. So only this analysis, yeah, made me crazy amount of money just 2 days back and yesterday. So this is after. All right. Oh, who's calling my phone? So just this one, so you can see how price moved off at this point, this box that I painted. Now today we are having something similar again. So that's the reason why I'm showing this before and after. So you see this, my gray box right here again. Yeah, I'm anticipating price to get on this box. Maybe a splash. Immediately it will give us a weak rejection, and then I will start to buy. That's what I'm waiting for at that point. Now, why am I waiting at that point? Okay, here's the simple reason. The reason why I waited at this former point, yeah, when price bounced and moved up, even when price was at this point here, was number one, I knew that trend line was here. There's a valid touch. This is a trough. So I just elongated. I just draw a trend line and draw it out, even though price has not gotten there. So I knew that whenever price touches here, there's definitely going to be a rejection, which is what you see right here again. Let me refer you here. So I just had this trend line valid then. So I already knew that whenever price gets to this point, yeah, it's going to touch this trend line. Upon touching this trend line, we're going to wait for price action, rejection, and then bang to the upside. All right. So that's what you have, right? That's one of the reasons why I did that. And there are many other reasons, because there's a psychological level there too, psychological level of 1.37500. So psychological level, they hold crazily. So that's what happened here. When the price spike up, touching the psychological level to 1.380000, it dropped down. Touching this one to 1.380, it dropped right there. So it happens a lot on psychological level. So here's also a psychological level. Here's a psychological level. You can see price dancing all around at this point too. Danced around for a very long while at this point, because it's a demand and supply level. All right, so that's it on that note. What I'm just expecting now, yeah, I'm waiting for price, yeah, to have something deep around this region. Then from here I can look to go long. So that's what I'm looking at for. Why am I looking to go long? Because there's still room for price to come. So price will likely touch off this trend line and before it start dropping. Now, here's a trend line break. In trend line trading, we have two types of trend lines. Okay, we have trend line break and we have trend line bounce. Here's an example of a trend line bounce. Upon touching this trend line, move up, come back to touch the trend line, it's going to bounce it up. All right, come back to touch, it's either breaks or bounce. But at this point, it got broken. So upon this break, we should have a retest on this trend line before it finally drops. So this is not a proper retest. So hence, we are going to have a proper retest on this trend line, maybe somewhere around here before we can drop. And it only makes sense because once it's testing this trend line, it's not only testing the trend line, it's also testing the psychological level. And note, psychological level have been holding for a very long while. Held here, and it will still keep holding as far as that level is solid. That demand level is solid. It held here. Yeah, it also held here. Somewhat close, but we should have something around this region too. So that's just my analysis. All right. So we have a safety buffer. What is our risk management just in case this analysis is not right? Okay, my stop loss level is going to be somewhere around here, because we always are in trading. We know that there's no holy grail. Yeah, we plan out for, okay, what if. All right. So now let me pull up my long opportunity here. So I'm going to be waiting for price somewhere around here. Then I'm going to make sure the stop loss is not more than 20 pips, and at the same time also respecting the levels that I feel it probably may not get to. Then if you get to this level, then I'll consider that I'm wrong. Yeah, I'll agree that I'm wrong. Okay, so my take profit will have to be at least twice bigger than my stop loss. Just like I'm buying a gadget for $1,000 and I'm flipping for $1,500, or I'm flipping for $2,000. That's just a simple meaning of this thing. I mean, for beginners who do not know what risk to reward is. All right. So with that said, I'm just going to be anticipating. Though it's already moving, I'm not going to get it, not until it fulfill what I'm expecting it to do. Because this candle can be so bullish, and at the end of the day, it's going to melt and turn bearish. That's Forex for you. So you just have to wait and trust the process, trust the plan. All right. I believe I've said more than enough today. So that's my analysis. So let me show you more of that time frame, so we don't get stuck on just one time frame. So you can see a broader view. This is on 15 minutes. Now let me take you to 1 hour time frame. 1 hour time frame simply means what 1 hour time frame simply means is each candle right here took 1 hour to form and close. All right. While on M15 took 15 minutes each to close. So this candle right here, you can say it's, since we are 6:58, this is 1 hour, almost just 2 minutes away from 1 hour to close. All right. And 4 hours simply means it took 4 hours to form and close. So you can just know what daily is going to mean. Each candle is going to represent one daily action. So that's a long time. So as a day trader, I stop at 4 hours. Yep, as my main trend. So all I'm just seeing here is just consolidations. Consolidation. Like here is what I mean by consolidation. Consolidation is a situation in market where price is sideways, like these. It's just basically sideways. No actual movement, is sideways. You notice it's not moving above this point. Touching here, dropping, touching here, dropping, touching here, dropping. All right, so that's it. It's just purely charts analysis. It's nothing more. Okay, so what am I looking at for now on 1 hour time frame? 1 hour time frame is still saying it's pretty bullish. 4 hour time frame too is also saying it's a reversal. It's coming up. It's bearish, but we should have a bull run in no time. That's if this trend line is successfully broken. This one, if this trend line is successfully broken, then we should have a bull run. Yeah. But right now on 15 minutes, since I'm a day trader, I'm just watching to catch the smaller moves. So you can see right here, it's already 7 o'clock. Yeah. So a new candle just popped up, and it's a bearish candle on 1 hour time frame. So let me delete this gray box so you can see clearly. So it's popping up right there. So let's go to 15 where you can see clearer. So I'm expecting price to drop down to this box, then I'm going to go long. That's all I'm anticipating for. All right. And where am I expecting to stop? Price might stop here. Why? When it's touching this trend line and this psychological level and drop back down. Okay. So that's it, guys. See you guys.